Hello, welcome back. Time once again for our business news, and I'm joined again on set by William Edwards. Hello, Will.
Hi, Louise.
So, we're starting with news that the European Commission has launched an antitrust case against Russian energy giant Gazprom.
That's right. It's looking into whether Gazprom abused its dominant market position in several EU countries to hike up prices and push out competitors. You might remember that back in 2006 and 2009, Gazprom actually cut off gas supplies to a number of Eastern European countries in the middle of winter over price disputes, leaving thousands of people without heating. Of course, that's not to say that they have abused their position, but suspicions were raised after Gazprom's prices went up in the middle of the financial crisis. In some countries, when you'd expect with falling demand, the prices might go down. And it's this sort of thing that the European Commission is going to be looking into now in its probe.
OK, meanwhile, there's another energy company that's in trouble on the other side of the Atlantic.
Yeah, and that is BP. The US Justice Department has slated them in a memo in the run-up to civil proceedings over the Deepwater Horizon oil spill. You remember that huge story back in 2010 in the Gulf of Mexico. One of BP's oil platforms blew up, killing a number of workers and causing huge environmental damage. Now the Department of Justice has said the behaviour, words and actions of BP's executives wouldn't be tolerated in a middling-sized company, even in a suburban mall. And then they say that they should definitely not be tolerated in something as complex and dangerous as deep-water drilling. So this is just the run-up, the drum roll perhaps, for the case that will be really coming to the courts next year. They could face a fine of up to $21 billion.
Oh, that's an eye-watering figure. Strong words there indeed. Well, next to Greece, where members of the Troika are arriving this morning. That's inspectors from the EU, the IMF and the European Central Bank. The country is still struggling to stay in the Eurozone, but it's a challenge that isn't getting any easier, as we all know, years on from the beginning of the crisis.
Desperate protests outside the front door of Greece's health minister. These Greeks have been left reeling after suddenly being forced to pay for health services that were previously funded by the state.
We have faced all sorts of problems. They cut our pensions, they cut our supplementary pensions, they cut our benefits, they cut our medicines. We can't buy medicines. The situation is tragic. Our lives are in danger.
Greece is currently awaiting the latest instalment of its euro bailout package, but only if government costs are cut further. To oversee the country's progress, inspectors from the Troika, the group made up of the EU, IMF and ECB, begin arriving Wednesday. The Greek government is expected to offer them further cuts in pensions, which have already been reduced twice since 2010. Polls across Europe mostly show support for Greece staying in the Eurozone, except in Germany, the country's main bankroller. For French President François Hollande, there can be only one solution to the problems: a united Europe.
It is the European Union that has to find solutions for Spain and Greece and move forward to the next step at the end of the year, which will be a closer union of our banking institutions, a deeper link with our economic and monetary institutions.
There are hopes an EU summit in October will offer Greece and other debt-stricken countries some relief. Meanwhile, the crisis continues to churn, claiming more victims than it offers up solutions.
Well, Will, we're going to look at the markets in just a moment, but there's a particular stock that has been garnering column inches for all the wrong reasons.
Yep, it's Facebook, and they have taken quite a tumble over the last few weeks and months, really. And on Tuesday in trading on the Nasdaq, they hit a new low, $17.55 they hit, down from $38 per share was their launch price. Mark Zuckerberg, the founder, has been forced to say that he will not sell any of his shares for at least a year in a bid to shore up a bit of confidence in the stock.
OK, so let's look at those markets then, Will. How have they been performing?
Yeah, well, let's take a look at Europe first, which is just opening up at the moment. And as you can see, things pretty flat there across the board. London, I suppose, seeing the most action, perhaps following on from some of the worries in Asia, which we can look at now. The Asian markets have ended broadly in the red. There was a worrying report out from the US which said that manufacturing is set to slow down. Not good news for President Obama with his convention underway at the moment, and that has affected the Asian and perhaps the European markets.
Still, at least car sales look to be bucking the trend in the US.
They certainly are for August. Let's take a look at year-on-year growth for the month. You can see here healthy gains for all of the top companies. Volkswagen really pushing ahead there, up 63%. The Japanese companies there, Honda and Toyota, they're bouncing back from the Japanese tsunami the year before, of course, which really affected their production lines. And solid performance from the big three, as they're known in the US as well. A few reasons for this. The average age of cars in the US is currently 11 years old, so a lot of people looking to get new cars, even if well, one way or the other, they're going to be buying new cars. Also, despite the high cost of fuel at the moment, that means that more people are going to be going for fuel-efficient cars, such as Volkswagens perhaps, which is maybe why they're doing so well right now.
Okay. Now, next to a battle between two of France's most prestigious companies, that's LVMH and Hermes. They own some of the world's most famous luxury brands between them. Now, a long-running feud looks set to end up in the law courts. Take a look.
They're two of the big names in the world of French luxury, but behind the upscale handbags is a battle of the brands. Hermes is a family-run business founded over a century and a half ago. In 2010, LVMH bought a 17% stake in the company. By the end of this May, those shares had grown to 22%, and the Hermes family is now fighting to stop what it sees as a takeover by its larger rival. With a focus on craftsmanship and rarity, Hermes has just 340 stores around the world. Its turnover is conservative compared to others in the sector, but is still growing, at 2.8 billion euros last year.
Some brands are driven more by their internal culture and, by their commitment to respecting heritage and savoir-faire, more than external market factors. And other brands are driven by both.
LVMH shows another side of the business, the fashion Leviathan. 4 letters hide 60 brands, from Dior to Louis Vuitton, from leather to champagne. A strategy of aggressive expansion and acquisition means the group is visible almost everywhere. They have more than 3,000 stores across the world, with a turnover of over 23 billion euros. Hermes says there's more to the fight than different visions. They're asking a French court to look into complaints of insider trading, collusion, and price manipulation.
Now, Will, tell us more about that airstrike that was being carried out by Europe's largest airline, Lufthansa, yesterday. Is that now having a knock-on effect?
It certainly is, yeah. Over 200 flights were cancelled yesterday from Berlin, Frankfurt and Munich. Today, there are those knock-on effects. Cabin crews went on strike, and of course, with an airline, it's very complicated to get everyone in the right place at all the different destinations. Today, we're going to see more than 20 flights being cancelled, at least from, like I say, Berlin, Frankfurt and Munich.
Now, Will, I know you've been looking forward to this story all throughout this bulletin. McDonald's is bringing in an all-vegetarian restaurant.
Yeah, Lou, you were telling me how much you like a McDonald's once in a while, but yeah, apparently you can have a Big Mac, well, a McDonald's without a Big Mac, if you can believe it. This is in India, where meat can be quite a controversial topic. Of course, Hindus consider cows sacred, so no beef for them, and Muslims consider pork to be an unclean meat. So McDonald's, with their first try at this, are going to try a vegetarian restaurant, avoid those controversies. Their most popular offering isn't the Big Mac in India, it's already the Mac Aloo Tikka burger. I don't know if you want to try one of those.
What's in that?
Well, you get a spiced potato-based filling, apparently.
Wow, would you give that a whirl? Would you
I'd certainly give it a whirl. It accounts for 25% of sales in India.
That's not bad. I'd give it a whirl for that. Thank you very much, Will. That was Will Edwards, our business editor there. That's where we leave that edition. But do stay tuned. Stuart Norval coming up in just a few minutes.